Hey, Kevin here, top 100 financial advisor and best-selling author, and we are here to talk about the stock market. I am in my regular location. I think we're going to get right back into the pattern that we've been doing for the better part of a year, and that's Monday through Fridays videos that helps to answer your biggest questions and give you some tips and tricks about the investing world that you can get started and like actually use. So I'm glad to be back. I hope y'all are glad to be back, and we're going to get back on our consistent pattern. Been traveling, been doing a lot of stuff with the book, with media appearances, and now let's get back to business. So y'all will start seeing more emails from me, and I'm also teaching a new class to help you create your six-figure investing plan. That link will be above, below, wherever you may be watching. All right, so now with the intros and stuff out the way, I want to go ahead and tell you about the one trick that every new investor should be using. And really, every investor period should be using. And I've told you about this before, but I want to show you some numbers behind it because a lot of people struggle a bit with the math. And while this is not a math lesson and I was a math teacher, I am going to kind of break it down and give you a high level overview. What is this trick? This is DCA, dollar cost averaging. It is the practice of investing on a regular basis. For some people, it's monthly, bi-weekly. I do it weekly on the public app. I'm actually going to show you my actual account as of today. Take some screenshots. I want to show you like why I do it and how it can really, really boost your investment returns. Okay. So remember that when you are buying a stock, in most cases, it is really, really difficult to time the market consistently. There are some times when we talked about Coinbase and others where I say, look, I'm gonna get in at this price, I'm gonna get out at this price. And more often than not, that does work for me, but I cannot do it consistently for 50 stocks, or I can't do it every single day consistently and be right every single time. That's a losing game. And I am not gonna sit up here and lie to you. The majority of my money is in longer term investments, it's in index funds, and that's where the real bread is made, which is why you call me Building Bread. But let's go ahead and show you what it is and why and how it's helped me, and the difference between investing all of your money at once and spreading it out, because that's a question that people ask me too. Hey, I've got $1,000, I got $10,000 from a settlement or tax returns or whatever it is. Should I just pour it into the company that I like right now, or should I just kind of wait and sparse it out and kind of piece it out? I always say break it up into pieces and do it on a regular basis. So here's why. So I'm going to go ahead and share the screen real quick. And I might write on the screen if it lets me do it. Sometimes it freezes. All right, so y'all have heard me talk about Adobe. At first, I wasn't a big fan of Adobe. Well, 6 months ago when I bought it, right around 6 months ago, I thought Adobe was going to be fire, right? And let me see if it's going to let me write on the screen. And it is. Okay, so this is from the time that I bought it. This is right around December of 2020. And you can see that there were some points. Look, this is where I bought it at. This is the initial line, the price I got it at. And for a long time, right up until right here is when it finally started to break out, right? It hadn't been doing much of anything until then, which is why I've been telling y'all, well, I'm gonna get out of Adobe, I'm gonna get out of Adobe, but the story's starting to change, which is weird for me. All right, so and this, you can do this in almost any app. I think Public, one of my favorite investing apps, one of the best places you can do it. All right, so you can see here that since I first invested around December, end of December of 2020, I've made about 8% from the time that I first invested. That's the first purchase, the first time I put money into it, it's been up 8%. However, that's not the only time that I invested in Adobe. I kept doing it every single week, usually on Fridays. I say I'm adding, I keep putting DCA, dollar cost average. And what does that mean? In some cases, it means, well, really, in all of these cases, it means that every week I was buying low, right? Lower than what I got it at. And when it starts to move up, we call this averaging down. So right now you see the price is $567, but if you scroll down and you do this on your app as well, it'll show you the average price paid. So on average, because I kept doing it over and over and over and over again, you take an average of that, and I bought an average share price of $490. So it's 490 is the average I got it at. Right now, it's at 567. So instead of the 8%, let me get rid of all these lines. Here we go. So instead of the 8%, if I just put it in, dropped it in all at once, I got in an average of 490, which makes my return 15%, or about $60. I got like $500 in it, which is really good, right? 15%. I could have just dropped it in at once and got 8.5%. That's not it. That's meh, right? Like, if I were going to get 8%, I just would have did a regular index fund and call it a day. I'm taking on more risk, so I expect to have a higher return. And in this case, we get a pretty decent one at 15% because we invested on a regular basis. Now, this is not something that happens every single time. The stock could have just continued to fall, and I would have taken an L, right? But the way the math works is you're taking an average. Is why you call it dollar cost averaging. And when it's down here, I get a piece of it, right? And on that date, these shares from this point to this point, that's a much bigger gain than from this point here if I just did it at once. And that's that's pretty much where I would have ended at. See, that's the difference, because I'm dollar cost averaging. So I'm getting small pieces every single week or every month or every 2 weeks, however you want to do it. And by default, whether it's high, whether it's low, I'm going to consistently get in. And usually more times than not, you're going to be better off. So that's just Adobe, right? Again, I've been complaining about them, but I'm looking at it now 6 months later, which is why I tell y'all, I just wait back. I sit back at least 6 months. Sometimes I wait a year and let things play out. It was not looking good for me for a very long time, but it's finally starting to pay off, finally. But also, I'm up 15% because I did that dollar cost averaging strategy, the thing that you need to be doing. All right, so if we scroll up some more, another stock that I was not really high on, right? Or have not been really high on. Back in December, I thought T-Mobile was going to be the best thing ever. It was up like 129% or something last year. I've been talking on the Flavor podcast that I cannot wait to get rid of T-Mobile because it fooled me. I didn't think that was the company that I thought it was going to be 6 months ago, but things are changing here too. You can start to see right around this area, this is when T-Mobile started to take off. So again, that patience pays off, right? So you can see right here, since the first time I purchased, which is right about here, 6 months ago, let me just circle that because that's ugly. So 6 months ago, it's 8%, good. Like I made money, right? I'm not ashamed of 8%. Like, look, you made money, right? Everybody can't do it. But if you scroll down, in my account anyway, if you scroll down, look at here. Average price paid is 132. The price right now is 145. So when you add up all of that, the all-time gain for me in this company as of today is 10.28%. So again, I increased it, not by a whole lot, about 2% and some change, a little less than that. I made 10%. Again, it's not something that, is a right home, like world's greatest investor, you made 10%. However, it is, number one, you made money. Okay, that's the most important thing. You never go broke taking profits. Will I sell out of T-Mobile and Adobe? We'll see. It can continue going in the direction that I needed to go in, or it could not. We don't know. So we'll see if I keep it or not. However, you can see how consistently putting in money and staying in for the long term, you can still profit. So for both of those companies, if I had sold out 2 months ago, I would have taken an L. I would have taken a loss and wouldn't have got that money back. But now, because I waited and I was patient and I consistently invested, I'm turning out better than what I would have if I just poured the money in at one time. Now, your next question might be, well, are there some cases where you could just pour it all in at one time and made more money? Yes, that's entirely possible. The hard part is, how do you know when? Right? If a company is dropping, and I've got sinus as an analogy, so I apologize. So I'm in this here in a few minutes. But if I just poured it in at the low point, right, that would have been awesome, except you never know when that's going to be. Nobody knows when that's going to be. Sometimes you get lucky, sometimes you don't. Totally depends. But the thing that you need to know is that, one, being consistent is extremely important. That's a trick that you want to use. You set your own timeline. I like biweekly because some people get paid biweekly, so you get to do it like that. I like weekly too, because on an app like Public, I can just quickly just go through and do it, post it, tell people about it, and move on, right? But you can see that it can be profitable. Are there cases that it's not profitable? If the company is consistently down, then no. But sometimes a company that's up and down, you can lower those losses too, as opposed to pouring it all in one time and the stock drops off. If it's going up and down, you might be able to kind of save a bit of money and protect some losses in some cases. But again, because we don't know when the perfect time is to invest, you invest all the time. And that's what dollar cost averaging is. All right, so that's it for me. Make sure that you hit the share button. Make sure that you click the links above for my free class. It's going to teach you how to create a six-figure investing plan. It is totally free, and you are going to enjoy it. I've gotten some great reviews on it so far, so make sure that you check it out. And that's it. I'll talk to you guys later. Bye.